I'm Courtney. I'm a licensed CPA and daycare owner. And today we're going to be answering a super important question. What exactly counts as income in your childcare business? Well, before we jump into that, I have a quick reminder. The tax laws are complicated and they change often. So it is very important to make sure that you are learning from and working with a licensed CPA. If you're not sure if the person that you are working with is a licensed CPA, you can find out by going to cpaverify.org and inputting their first and last name. If they're licensed, their name will come up along with the state that they're licensed in. Okay, now that that's out of the way, what exactly counts as income in your daycare? Well, when you think about daycare income, the thing that probably comes to mind is direct payments from parents, right? So these are the payments that parents give you in exchange for providing care. This is very likely the largest category of daycare income that you have. And so these payments can be received in the form of cash, check, bank wire, Zelle payments, Venmo payments, regardless of how it's received. It is money that are receiving in exchange for providing care. It's a direct payment from a parent, and therefore it is definitely considered income, right? So that's category one, direct payments from parents. We have three other categories, and we're going to run through them pretty quickly here. All right, category two, state subsidies and government payments. So this includes things like the meals program. So if you participate in the federal meals program, the money that you receive from that is considered income. If you accept subsidies from your state, that's definitely considered income. If you receive some kind of stabilization grant, that's considered income. Any kind of pandemic or economic relief fund or grant that you receive, all of that's going to be considered income. So generally, as a kind of a general rule, whenever you're receiving a payment from the federal government or from the state, it is very likely going to be considered income. All right, so again, category two, state subsidies and government payments. Category three, bartered services. This is one that you probably don't think of as being income. But what are bartered services? So bartered really just means trade. So if someone is providing a good or service to you in exchange for you providing childcare for them, that is considered income. What's a quick example of this? Maybe you need your driveway repaved. And so the professional that's doing that says, hey, instead of paying me, $5,000 for this work, if you agree to keep my child in your daycare for the next, 3 months, we'll call it even. So if you make an agreement like that, right, no cash is actually exchanging hands, but you've made a trade. You've traded one service for another good or service. That is considered income, even though no cash trades hands, even if the person says something like, hey, do this for me, I'll do this for you for free. Even if they use the word free, technically it isn't free because something of value has changed hands. And so that thing of value is the service that you provided in exchange for the service or good that they gave you. And so again, that is considered income. All right. And so bartered services, that's our third category. Our fourth and final category is going to be deposits, late fees, and application fees. So I'm sure you know exactly what these are. When someone's applying to your program, they're going to generally remit an application fee to you if you charge an application fee. If you charge some kind of deposit, they're going to remit that. If you charge a fee for late pickups, those late fees, those are all considered income. So our fourth category, deposits, late fees, application fees. And then just a note here about refunds. Refunds are not considered income. They're more of a contra income account. So contra really means contrary to, right? So really an account that reduces income. So if you've provided a service to someone, your child care service, right? You've provided some care to them and they ask for a refund. The amount of the refund that you send back to them should reduce your income to the extent that you've picked up the full amount of the initial payment in your revenue. So an example of that, because now that I'm saying it out loud, it sounds a little like, CPA accounting jargony. So if you charge someone $100 for 2 days of service and they come back and say, actually, I wasn't satisfied, or, I didn't use, the second day, I'd like a refund of $50. And you say to them, okay, yeah, sure, here's your $50 back. You only get to actually reduce your taxable income or your revenue by that $50 if you have already picked up the full $100, right? It isn't the case that, the person asked for a $50 refund, and so you hit revenue for, $50, and then you reduce revenue by the $50 refund. That would really be considered double dipping. That wouldn't be accurate record keeping on your part. And so that isn't how it works. So refunds reduce revenue or reduce income to the extent that the refund was already included in gross income at an earlier date or time. So that's how that works. All right. So I hope this video was helpful to you. If you have any questions or comments, feel free to drop them below. You can also get in contact with me by visiting my website, and I will list the link to my website below. Okay, I'll see you in the next video. Bye.